So again, welcome to BMGT 443 Equity Analysis for the fall 2019 semester. My name is Professor Perfetti. I will be the instructor. This is my 13th year teaching this class. We have a lot of you that are registered across 4 sections. This is the 1230 section, but basically this class runs, there's 11 a.m. section, 12:30, 2, and 3:30. Just real quick as we get started, that's my name. That's my email address. That's my cell phone, so you can text message me there. I have an office upstairs, 4456, which I'm never there, but my TAs will be there, mostly for office hours and for grading purposes. And so I like to say that this is actually my part-time job. It's not really my full-time job, so I'm only on campus 2 days a week during class hours. The rest of the time, I'm out doing real-world work with real companies, which actually will benefit you in terms of bringing in the real world to this class. So generally, my office hours are going to be before or after this section in terms of the class, and the TAs can start first. Word about the TAs. The TAs are actually kind of special in that they're undergraduate TAs who have actually taken this class. So the Smith School wanted to give me MBAs, and I was like, look, that's a waste of my time because they don't know Bloomberg, they don't know our approach, and they don't know what we're teaching. So the TAs that we have, which we have 3 of them this semester, all took this class previously, all got A's in this class, and they're generally good at understanding the concepts. So they will be very helpful for you. They're also doing all the grading, but more importantly, except the group projects, which I'll be doing, but basically they can help you with concepts, etc. I'm here to help as well, but nonetheless, feel free to leverage the TAs. So one of the things that we did is I posted on our course site in Elms on the homepage. These are the 3 TAs, Harmon, Shreya, and Michael. That's their email addresses. Basically, they also have office hours starting at 10:30, running through 4:30 every Thursday, pretty much continuously. Each of the TAs will cover 2 hours each in my office in 4456, starting this Thursday, theoretically, if you needed it. Okay. Now, what I'll also say is, since the TAs are going to be doing grading, each of the TAs has been assigned a section. So you guys are, I believe, section 201, the 1230 section. So your TA is Shreya. Okay. So basically what that means is to split up 165 students. They're doing a third grading. So Shreya is taking the grading primarily responsibility for your section. Okay. Obviously, you can talk to any of your TAs about the content, but for the 1230 section, she's going to be the one that if you have a grading question, you'll need to ask. The other thing that we'll talk about is if you need an exception, extension, etc., they can also give them in addition to me, but make sure they're in writing. Okay. So any extension or exceptions that are not in writing will not be honored. So it has to be confirmed with an email. So there's no verbal ambiguity about what has been said. Right. So back to the class itself. What I tried to do this semester is I put bullet points because I realized nobody actually reads these syllabus. And so to make it simple for you, I'm just going to cover the most important concepts of the syllabus in bullet point form. But they're all important. But regardless, what this class is really about is applied equity analysis. Keyword on applied. Unlike any other class you've probably taken at Smith, I'm not going to teach you the core concepts. I'm going to take the core concepts and bring them into the real world. Okay, so everything you've taken here, I look as a building block to enable you to have this class. All right, but I'll also say I'm going to teach you some new stuff, but the real world stuff is really what we're going to focus on. So this class is not about the Harvard Business School case where a professor picked a certain circumstance at a certain time that worked one way and then used that as an example. Like I'm going to pick up examples of like, I have no idea why this is happening, and we got to figure out how to explain it because we're going to be looking at the real world. Right? And so that's going to be the advantage, in my opinion, of this class, because it'll also prepare you for what we do in the real world. Matter of fact, you're going to use the real world pro tool of Bloomberg throughout the semester pretty heavily, which is a big advantage to you. But I will also say that I went to Wharton, and when I was there, I was thinking about being near graduation, and I didn't really want to work too hard my final semester. So one of the classes I took was on Hitchcock. An elective on Hitchcock. And all we were going to do is watch Hitchcock movies and write papers on it, which I thought was going to be a complete waste of time. Easy to do, crutch class, because I'm just smooth. I'm not worried about my job. I'm set. Well, that's not this class. So for those of you that are seniors that think that this is the easy Hitchcock-like, just watch the TV and not do much, this is not for you. I strongly recommend you drop this class. All right, this class is going to be its work. And what you put into it is what you're going to get out of it. I'm going to ask you to put a lot into it. I'm going to get you a lot out of it, but it's going to involve work. There's going to be 13 homework assignments, one a week for the next 13 weeks, starting next week. There's going to be 3 one-week-long team projects, which you got to participate in as a team. There's a semester-long team project, and then there's a half-semester-long mega project for your team, all which involves. There's 2 midterms and a final exam. It's a lot of work, okay? I'm sure you've read all the online course stuff. If you put a lot of work into it, you do your work, you're probably going to do well. But if you don't, you're probably not going to do well. You're going to not like the class. And so I'm just letting you know in advance, this is not the, I'm just trying to cruise until I graduate class. This is not for you. There's 7 people on the wait list that want to be in here, and I'm not going to be offended if you want to drop the class. So I'm going to be very transparent with you today about what the expectations are, and it's up to you to decide whether or not you want to continue. Okay? So what's the class going to be about? Primarily, it's equity analysis. So I'm going to teach you 4 things. 1, I'm going to teach you about the industry. Okay? The industry matters in terms of the performance of the company. So how do you analyze and understand an industry? Some industries are better than others. Framework EIC. 2, I'm going to teach you how to do historical analysis, but it's going to be in a different way. It's a McKinsey approach. It's actually better than most traditional benchmarking. It helps us with valuation, but it's an approach you had not seen before, and you're going to have to learn it. And we're going to be using it extensively this semester, and some of you are going to really struggle with this. Number 3, I'm going to teach you how to do valuation. All right, we're going to use a real-world model. We're going to spend 3 weeks building an Excel model from scratch. So if you don't know Excel, by the end of the semester, you will know Excel. Okay, so you're going to heavily build a model which is linked to Bloomberg that will pull real-time data to do real-time valuations. It's ironic, I just got an email from Bloomberg, and they said they've been using the model for the last few years at Bloomberg, and it's broken because they can't figure out how to balance it. So they want my help balancing our model, which is being used in the real world. So it's actually a real model, so that would be amusing. But and then the 4th part is we're going to do multiples. We're going to do an understanding of multiples, which is just another form of valuation and what it means technically, as opposed to the stuff that you learn, which is primarily pretty basic coming into this class. And we're going to integrate all that. So that's primarily what the topics that we're going to cover. Okay. And as I said, you're going to learn Bloomberg, and you're going to use Bloomberg. How many of you are currently Bloomberg certified? Okay, here's the good news. One of the requirements for this class is you will be Bloomberg certified. Okay, that is one of your first homework assignments due 2 weeks from Friday. That's 5% of your semester grade. Okay, it's going to take you 8 hours to do it to get Bloomberg certified, but you must be Bloomberg certified. Now, practically, it's probably more like 4 hours, but they say allowed 8. Okay, and Bloomberg is the pro tool. So just so you know, Bloomberg, Michael Bloomberg, former mayor of New York, is a billionaire because of the software. It's got 320,000 users globally, but it's the actual pro tool if you work in finance, right? And it's real expensive software. It costs $25,000 a year minimum per user, minimum 2-year subscription, to start using the base model of the software. Okay, your cost, 0. It's free to you while you're a student here. We have 60 terminals in Bloomberg. 32 of them are in this lab at College Park. There is no other school in the world that has 60 Bloomberg terminals. I went to Wharton, still do some teaching at Wharton. They have 8. Put that in perspective. You have something unique here that no other student gets, an entire semester in a Bloomberg lab. So we're going to take advantage of that. And it's funny because Michael Bloomberg came to our graduation. He was the keynote speaker for the spring graduation. And they let him tour the lab, and he saw how shitty this lab looks. Okay, because basically, even though we spend a whole lot of money on the software every year, the computers were 7 years old. You can see that the electronics have been unplugged because they're broken, because they haven't touched this lab in 13 years. He saw how bad the shape the lab was in. He gave us an $800,000 gift. So in addition, he gave us a bunch to spruce up the lab. The first one, and we can thank Bloomberg, is basically they gave us all new computers. So these computers were 7 years old, and at any point in time, 3 of them didn't work. So it's kind of like you had a Ferrari that was constantly in the garage, right? Well, now the Ferrari's ready to hit the open road, okay? So nonetheless, thank you, Bloomberg. Regardless, that's going to be one of the other things you're going to heavily focus on. A few more things. This is a blended class. I want to be very specific. If your expectation is that we will have 2 hour and 15-minute extra lectures per week for the next 13 weeks, this is not for you. Okay? I will lecture, and you'll see this right now. I'm recording this and I'm posting this on YouTube. I actually have a YouTube channel which a lot of people subscribe to. Many of them are not even like Maryland students. I'll get random emails from people who might be listening to this. So like, can I have the model? Can you help me with the model? And I'll try and help them wherever I can. But the point is, we record every class. I used to just record classes that I wasn't here for, but now I record everything because it's also a reference for you. So those will be posted not only on YouTube, but links on our Elms course site homepage. So therefore, you can watch them at your leisure. But I say that because what's going to happen is about 20 to 30% of the classes, instead of a lecture, there'll be activities. A good example next week. The only way you get Bloomberg certified is you have to use one of these terminals for 8 hours, up to 8 hours. There's 32 of them in a room, and there's already 45 people in this room. There's not enough time. And you can't take this certification outside of these terminals. So you can't do it at home. So next week, as part of Labor Day, I'm not going to do a lecture on Wednesday. I'm going to give you Wednesday's class as well as a Labor Day week to get Bloomberg certified. It's just one of the examples of what's coming up. So again, sometimes you'll be doing that. Sometimes you'll be doing case studies and groups and exercises and watching videos online, but there will be lectures. But I'll also tell you that when I do a lecture, I expect you to come prepared. There's a textbook, I would expect you to read it. And I'm not gonna baby you. I'm gonna teach you as if this is real world, and I'm expecting you to know the concepts. But I'm also gonna be very clear. If you don't know anything, ask. The worst possible thing you can do, sitting in your chair, is looking at me and like, I have no idea what he's saying. I really wish I could ask a question, but I don't want to look foolish. Well, shame on you, right? It's your responsibility to learn. You're going to get into this, what you put out of this, and I'm just telling you, I'm going to learn. There's things that we're probably going to talk about I don't know, and I'm going to have to figure it out, and that's okay. So if you have a question, now's the time to ask during the class session. Or if you feel uncomfortable, go to the TAs, but take advantage of this because, like I said, we're going to push you. But at the same time, we're not going to baby you, but we're going to help you if you don't understand. But you're going to get into it, what you put out of it. There's only so much we can do. And that's the other thing. If you don't want to come to class, I'm not going to put a gun to your head. Okay? It's up to you. Like, you're paying a lot of money to be at this school. If you don't find value and you got other things to do, first, I'd say take a different class. But secondly, it's your prerogative. There's going to be YouTube videos. If you can keep up with the assignments, do the YouTube videos, keep up with your teams, that's fine. But there will be at least 2 mandatory classes that you have to attend, okay? I put them on the syllabus. It's the first week of December. It's when the group projects are being presented. There are no excuses except for things like death in the family or major accidents or illnesses that are going to be acceptable for missing those classes. You know in advance, right? Because I'll be flexible on some extensions, but this one I won't be. Mark it on your calendars. You have to be there for those 2 days. Because for your group projects, that's when you're going to be presenting. We all got to be there for that. So there's 2 classes you can't miss. If you miss them, you lose 10% of your semester grade. Okay, no exceptions. So other than that, the other classes don't matter unless I bring in a guest speaker, and then I'll give you an advance. Then we're going to show up if we have a guest speaker because I'm going to bring in a very senior person, and we're going to give them the respect to showing up. And if you say, I can't make a class that's regularly scheduled for a time that I signed up for at the beginning of the semester as a mandatory class, I'm not going to have sympathy for that. So plan around it, but right now there's only 2 mandatory classes. All right, next, I'm expecting you to come prepared to learn. You will be Bloomberg certified. Matter of fact, you're going to start the certification today. 45% of your grade is in teams, and the first team project starts next week. So you really need to be in a team, okay? And what I'll also tell you is the team projects get team grades, and there will be team accountability. So I'll just tell you I'm going to give you the tragedies because I don't want to see them repeated. But last semester, so I'll just be really clear because people forget these things. That's why I'm recording this on YouTube as a reminder to you when we were arguing about how unfair I am in November. So here's the point. The team gets a team grade for the team assignment. If one of the team members oversleeps and forgets to turn it in, the team gets a 0. And there's nothing I'm going to do about it. It's your team's responsibility to get a team grade. Okay? So again, that's the other side of it. Your team is turning it in. And if your team tells me that you didn't do anything, I'm not giving you credit just because you're on that team. So there will be peer reviews as well. So again, half your grade is your team. And there's going to be a lot of important work to do on teams. So if you don't like team-based classes, you don't want to be in this class, right? So here's the thing. I'm going to let you choose your teams. So on Elms, under People for our course site, there's a sub-tab called Project Teams. For your section, and this is section 201, section number teams, you have teams 8 through 14. There are up to 7 teams per section. No more than 7 people in a team, no less than 5 people in a team, average 6, because we'll have about 42 people signed up per section. On the left, you will see a list of the names. Basically what you do is you drag your name into a team. You can start today. Teams, but here's the thing. You're in section 201, so you had to be in a team for the section you're registered for. And there's no cross-section teams. So if there's somebody that's a friend of yours in like the 11 a.m. section, you can't be on their team. You have to be in a team with somebody in this section. If you don't know anybody, you don't know whose team you want to be on, I'll put you on a team later this week. All right? So I'm just saying, think of today and Wednesday as your opportunity. If there's some people you really want to work with, you can start creating your own teams. But other than that, I'm going to put everybody on a team by the end of this week. You have to be on a team. Yes, sir. Oh, sorry, questions? Okay. So again, you can feel to initially start self-select. So again, no more than 7, no less than 5, average of 6 for the 7 teams for your section. Okay, a couple more things. Blah, blah, blah. Homework assignment every week. 13 homework assignments, midterms, final exams. Generally, with the exception of next week because of Labor Day, assignments will generally, the homeworks, 1 a week, will be given on a Wednesday, and they'll be due Monday, 10 a.m. for all sections. Okay? And that'll be the cadence for the homework assignments. So just so you're prepared for that one. And essentially, and I'll just mention this here, there's a 15-minute grace period, with the exception of exams, that we give for every assignment. At the end of the 15-minute grace period, so think the assignment's due at 10 a.m., you have until 10:15 to submit. At 10:15, you get a 0. I don't care. I don't care what your excuse is. You're getting a 0. All right? And I want to make this really clear to everybody. Right now, I have 165 people signed up and 7 more on the wait list. You're going to find this harsh, but in a way, I'm going to be as fair as I possibly can. I will do for you the same thing repeatedly in the light of day that I would do for any other person in this class. All right, I'm going to try and be fair, but fair means I'm going to be consistent. And I've explained the same thing to the TAs. So we're going to consistently apply a policy. So what I'm telling you is if you're late, you have to get a 0 because other people that were late got 0s. And if my car broke down and I was in traffic on 95 excuse, if I accept that, then every other excuse for being late would have to be accepted. So what I'm telling you is it's going to sound harsh, right? But I'm doing it for fairness for you versus everybody else not abusing the system. So again, I'm going to treat you consistently. And so let me just give you the standard here. Like if it's like, all right, really horrible stuff, university approved, okay, I'll understand. All right, but the basic stuff, I forgot, I'm late, I'm feeling a little stomach bug. Well, guess what? Show me a doctor's note, great. But if you're just feeling sick and you didn't turn it in, that's your choice. All right, so I'm going to feel awful, and I'm probably going to still show up because you expect to have a professor this semester. So again, if I'm really sick, okay. But if I'm not, I got to do my work. Same standard applies to you guys, and deadlines are going to be taken seriously. All right. So, and I don't want to see you fail, so I'm just being really clear about expectations. Now, I'll put a little asterisk on this, which is before deadlines, we will consider being flexible. Okay? That's your time. Before the deadline, we will be flexible. And I'll give you an example of this. I had a student in the last class came up to me and said, look, I have a trip planned for Cuba. I said, are you actually even allowed to go anymore? I thought the U.S. trying to ban us from going everywhere. But he said, yes, he thinks he's going to still be able to get in. So he's like, I'd still like to go. Can I have an exception for the assignment? Absolutely. Like, I'm going to support that. I'm going to support your club trips and the other things as much as possible within reason. But if it's I want to go hang out with my friends and family this weekend, do you mind if I have a homework assignment? Abuse. Okay? So again, if it's like something that's coming up and there's some religious holidays in the calendar, other things like that, before assignments, talk to us. And we'll generally be flexible. Get it in email writing that you got it. But nonetheless, after, I'm not going to be flexible. Same thing with job interviews. Hey, I got a job interview for the buy side of JP Morgan. Great. Can I help you with that? Okay. Take an exception. Versus, hey, Professor Perfetti, I'm sorry I didn't turn it in Monday because I was in New York for my super day. Do you mind if I turned it in now? No. Okay. So again, I just want to be really clear about the criteria. Now, here's the other thing. You're going to have technical difficulties. The world is going to hiccup. So it's 10:15, you're submitting, something crashed. Dog ate my homework. Okay? Electronic dog, I guess. But here's the point. I expect an email from you at 10:17. All right? So if you miss the deadline and there's a technical problem, minutes matter. And oh, by the way, that email at 10:17 better have the homework attached to it. Because if it's 10:17, it's like, Professor Perfetti, I couldn't submit it. And then at 1 o'clock, you send me that email with the actual attachment of the actual work, you're going to get a 0. Okay? So I'm just saying, I'm going to be reasonable, but I'm going to be reasonable to a point. I'm just very clear about what the expectations are. It's for your benefit. Okay? If you have a question, ask. All right. Last but not least, words. On your assignments, many assignments are going to have minimum word counts. 500 words, typical on most assignments. First thing the TAs are going to do is they're going to open your document, they're going to hit word count, and if it says anything less than 500, they're not going to grade it, they're going to give you a 0. Effort doesn't matter. So I want to be clear about my grading standard, and the TAs lived it, now they understand it, and they're applying it, which is, in this class, writing a bunch of words doesn't get you any credit. If you just say a bunch of stupid stuff in a bunch of words, I'm not going to give you credit for that. And it's not my responsibility to just go find a correct answer in something that you write if you just start throwing out words. That's not going to work. Okay? So in this class, a correct answer is a correct answer. And I'm going to only give you credit if you give a correct answer. I don't care how many words you write. I don't care if it's a 5,000 word paper, which I'm not going to do. I'll still give you a 0 if it's wrong. So you have to get the concept right. Here's the other side of it. You get it right, you don't meet the word count, you still get a 0. So there is a minimum level of required work that you have to commit to in this class. In fact, there's a variation of this that's going to be very important, which we're going to practice in a few minutes. In this class, unlike those other kind of like classes you've been into, which are a little bit more touchy-feely, strategy, marketing, stuff like that, you're finance people. You will use numbers with your answers. If you don't use a number with your answer, you get no credit, even if the answer is correct. All right, I'm saying this now very deliberatively because this will help you not only in this class, it'll help you in the real world. I'll give you an example later today. I'm going to ask you, is this an attractive industry? And somebody's going to say yes. I'm going to say why, and they're going to say, give me an explanation, and they're going to get a 0 if that was a graded assignment. Because they're going to have to say it was an attractive industry because the ROIC was 17% and the WACC was 8%. And that positive spread made it an attractive industry. Notice the difference. Is this an attractive industry? Yes or no? Let me flip a coin. I don't know. I got a 50% chance of getting that right. I seem to get a lot of coin flips right in previous classes, so I'm lazy. Right? That doesn't mean you're good. Right? If I tell you that it's 17% and 8 as a spread, then I know that you're looking at the right numbers, and I know that you actually understand the concept. So that's going to be very important when you talk and grade for all assignments throughout the semester. You're going to find it initial annoying, but it will actually make you much better finance professionals in the real world. Classes will be online. 6th edition of the valuation textbook is required. 7th edition will come out probably sometime this fall, but we're going to use the 6th. Don't get the 5th or the 4th. I've been teaching this class for a long time. Students are still trying to pawn that off through the secondhand bookshops. It's a waste of your money. The book was really completely rewritten in the 6th edition. That's the one that I'm going to be referring to. I don't even remember what's in the other editions. So make sure you get the 6th edition. I think it's like $20-30 on Amazon. It's the only required cost. It's not a very expensive textbook, but you will need that one. Project groups. Again, you can start forming your groups today. One of the first assignments is going to be called the Bloomberg Trading Challenge. So one of their first assignments is going to be semester-long assignment for your group. It's group grade. 10% of your semester grade will be this one assignment, split into 2 halves. In 2 weeks from today, your team is going to get a fictitious portfolio on the Bloomberg terminal of $1 million. You're going to trade stocks. It's going to be very important because you're going to pick one member of your team to have their Bloomberg account to be the account you trade on behalf of the entire team. So if they screw it up, your team is screwed. So pick somebody who is dependable, right? But nonetheless, they're going to trade on behalf of your team. You just trade as a team. They're going to have $1 million. 6 weeks later, you're going to get scored, right? The team with the highest portfolio value, whether it's 1 penny or $1 or $1 million more, gets an A. The team with the lowest portfolio value gets an F, and everybody else distributed in between. Pure relative grades. It's actually 5 points, 4 points, 3 points, 2 points, 1 point. Okay. Then we're going to continue on with that portfolio 6 more weeks to the first week of December, and then we're going to score you again. Okay. So that's one of your assignments this semester. Right. And so again, that's going to start very soon. It's a lot of fun because it's very real world. Okay. In fact, it's funny, when I was actually taking a version of this class at Wharton, this was half of our grade. So I think 10% is actually kind of fair. But regardless, you're going to be graded just like you would in the real world. All right, so in order to do that, you'll need to have Bloomberg Certification. So we'll talk today about what that means, how you get started on that, but you'll all need to start that process. You're going to keep up on current events, because if you don't, you're going to get completely lost. And that's going to be easy by the nature of the class. But let me just talk to you about grading, because I know you guys care about grades. This class grading system is different than many others, okay? Because what's going to happen is you're going to get homework assignment 1 is worth 2 points. You're going to get a 1 on assignment 2, and you're going to feel awful. God, I got 50%. This is awful. I've never gotten a 50% F before in my life. How terrible it is. And I'm going to be like, don't think about it that way. In this class, there's 100 total points, and each assignment gives you points to go towards a cumulative grade for the semester. To get an A in this class, you need 93 total points out of that 100 total point bucket by the end of the semester. So if you skipped homework assignment number 1 and got a 0, there's still 98 other points this semester that you can get to try and get to your A of 93, right? A minus 90 total points, B plus 87, B 83, etc. So every assignment just contributes towards your total points to the semester to work towards a grade, okay? But here's the thing, I don't curve, okay? Except I give extra credit, which is essentially a curve. So what's going to happen is at the end of the semester, I will add 5 to 7 points through a series of extra credit assignments of extra credit. So realistically, there'll be 105 to 107 points available by the end of the semester. I bet 106, probably call it the middle ground. Say 106, okay? And I'll see how we're doing. So here's the deal. You still need 93 points to get an A. So even when I add in 6 points, you have 106 points, but you still need 93 to get an A. It's not a percentage of a total. And ELMS will fool you because ELMS doesn't work that way. In the ELMS Canvas grading system, they do percentage of total points. So as I add extra credit points, your 93 divided by 106 is going to look like a B. But it's not. It's actually an A. 93 points is an A. So you'll be confused about it. You'll ask about it later. But I just want you to understand that that's what I'm going to do is give you extra credit. I do this because think about this trading challenge. If your team scores last place both times of the trading challenge, you lose 8 out of 10 points on that semester grade. There's no chance you can get an A in the class. Best you can do is an A minus. And that's in the team competition. So personally, I'm like, hey, it's all about the learning. Grades don't matter. But I live in the real world. So what I'm going to do is that's what the 5 to 7 points of extra credits are about. Is that whether it's the trading challenge, whether it's I did poorly on an exam, whether I had a problem with a missed assignment, whatever it is, the extra credit is your chance to make up for that. Okay. So again, just letting you know that's the way that the class will work with the grading. Okay. Now, final 2 things. Attendance we talked about. Honor code, please follow it. Because when you don't follow and put it in front of the honor council, the only people that are going to get blamed are me by your parents for your stupidity. So just don't have them blame me. I hate when that happens. Right? You can't use course assistant websites anymore. That is just not allowed. And those are now considered honor council violations. So if you go back to previous versions of this class, of which there are now 26 of them, and you use old assignments, that's an honor code violation. Old assignments, old exams, no longer allowed. It's school policy. And we will be honoring it in here. By the way, the assignments change semester to semester. Somebody asked me, they noticed that, like, Professor Perfetti, we noticed that there's 13 assignments, but they're all blank. Because to be honest with you, I don't know what they are yet. right? I literally look to see what's happening in the real world and try and marry that with a concept that we're teaching as we go along. They'll be up there before the assignment's given, but what I'm saying is they really aren't the same semester by semester. There's parts of it are, but either way, can't use previous semesters, right? And you can't buy those course website things anymore. Those are prohibited by the universities. Late assignment policy is pretty simple. Zeros if you don't turn it in. Don't matter what the excuse is unless it's a legitimate university approved excuse. Now again, something in advance, please talk to us, get it in writing. Special needs, if you have any kind of like extra time or you're on a sports team or something like that, again, let us know. We'll do our best to accommodate. And then here's something that's carried over from last semester. I trialed it last semester. Personally, I think it worked. Students generally liked it, so I'm going to do it again. First one, it's called the final exam opt-out. The final exam is worth 15 points towards your semester grade. If you do all the assignments, take all the exams, submit all your team projects, and don't miss the required classes, and you get a minimum grade on each, you don't have to take the final exam, and you just get 15 free points. Okay? If you screw up in any one of those, you don't get the 15 free points, and you get to take the final exam. Last semester, approximately 70% of the students opted out. Okay? Help me, help you. I don't want to grade things anyways. So to be honest with you, and if you work hard, you won't need the final exam. You're going to understand the concepts. So it's up to you. But I will also tell you, you're going to screw up because it's the way life works. So it's going to really suck for you if you've been working very diligently the entire semester, something happened, then you now have to take the final exam when you were actually a good student. So the other half to this is there's something called the homework assignment replacement. Right? This does not apply to a midterm exam. You screw up the midterm, you're taking the final. But for an individual assignment or the Bloomberg certification, if you screw up, then you can take the homework assignment replacement, which will be a 500-word minimum paper, check your word counts, on the actual topic, don't write about something else. And then basically, you can use that to replace any missed assignment with a full score. And what the TAs are going to do, because you can say, well, can I use it for this assignment? It doesn't matter. You can do up to the first week of December, you can submit the assignment replacement. And what the TAs are going to do at that point in time to check who has opted out of the midterm is they're going to look through the grading and they're going to look for your worst score. And if you did the assignment replacement, they're going to replace your worst score with full credit and it won't count against you as a missed score. Does that make sense? So you get one indulgence throughout the semester. So that's your other opportunity to use the get out of jail free if you screwed up. Okay? So that's what you need to know about assignments. Questions? Hopefully pretty straightforward. Okay, great. So as we talk about the class, let's get into our first topic. I posted the lecture notes online, and today we're going to start on lecture 1. So in the files section of ELMS, I will start posting the lecture notes, usually the week before, probably the Friday or Saturday before the Monday class. And these will be the topics that we're covering during the week. Now, again, these lecture notes, as you're getting this out, are not the only things that I'm assuming you understand. Meaning, I assume that, given the lecture notes, you've read any book assignments that I've given you, right? Or other things that you're prepared for, including you should have already known this from prior classes in some circumstances. So essentially, I'm assuming that you come with knowledge to apply what we're talking about in the lecture notes. Now again, if you're smart and you don't need it, great, but it's up to you. But if you're struggling, don't just sit there taking notes. Ask me. If you're uncomfortable asking me, please don't be. I'm being a little harsher today because, to be honest with you, I need 7 of you to quit. Right? This isn't like the Navy SEALs where you're ringing your bell and I got 7 people on the wait list that want to be in here. I just want to make sure that the people in here want to be in here. Because if you really don't want to be in here, there's people that actually really want to be in this class. And I'd like to see them have the chance to take the class. Okay? So regardless, lecture notes will be posted. So let's talk about lecture 1. While you're getting your content ready, first thing I wanted to say is, I'm going to ask you as a question. What's the difference between accounting and finance? What's the difference between accounting and finance? Because I got a bunch of accounting and finance majors in this room. So what's the difference between the two disciplines? Yes, sir. Okay, so record keeping versus projections. I think that's actually a pretty good explanation. So the only nuance I would add to it, unless somebody wants to add, is finance tends to look more forward-looking, and accounting is more backwards-looking. But as you said, it's kind of like record keeping. So I'll just give you a quick example. You know, people always like sports analogies, but I'm wearing a T-shirt. It's got the Atlanta Braves on it, baseball fan. And yesterday, they actually played a baseball game against the New York Mets. Does anybody know the score of that game yesterday? The Mets fans or Braves fans out there? The Braves won 9-5. Okay. Do you know how many games in a row the Atlanta Braves have won? Leading up to that game in a 162-game season?
They won 9 in a row.
7 in a row. Okay, they've won, I think, 7 out of 9, but 7 in a row. In fact, the Mets have been doing well, even better. The Nationals have won, I think, 10 out of the last 12. Okay, as they're all trying to win their division and make it to the playoffs. All right. And so here's the point. I can give you individual stats. I can tell you who won the game. I can tell you what their records are. That's accounting. The only difference is instead of wins and loss, what's your share price? What's your market share? What's your revenue? What's your EPS? What's your batting average? What's your slugging percentage? What's your OPS? It's really the same thing. It's just keeping score, right? And here's the thing. Who's going to win tonight between the Braves and the Rockies? Does yesterday's result of that game tell me who's going to win tonight with certainty? That's the difference between accounting and finance. So the accountants can keep track of everything that's happened, but they can't tell you what the future is going to be. And that's the danger. And that's actually one of the fundamental things I need you to understand about this class, is that the past does not guarantee the future. It just doesn't. It doesn't matter how quantitative you are. You can't guarantee an outcome. You still got to play those games. And that's the point about equity analysis. That's what we're going to focus on. Now, I'm not saying that we can't use the past to help us judge what's going to happen in the future, but I can't guarantee it. So we have to be more forward-looking, and we got to understand what's going to matter in that future. So that's really, if I think about the orientation you're going to have, is you're going to have a foot in the both worlds. Because people like to keep score, so we're going to keep track and keep score. But guess what? You can't drive a car looking in the rearview mirror, right? And here's one of the forward-looking things you need to be aware of. Chart on the right is the average length of time a company spends in the S&P 500 index. By 2025, we're going to lose half the S&P 500 at a rate of once every 11 years. So think about that. In about 11 years, half the S&P 500 will be gone. Either through mergers, acquisition, disruption. Companies like JCPenney's will just go out of business. Like, it's just going to happen. And it's nothing against those companies. It's just Darwin. It's playing out. But that's the point. Like, if we're valuing a company, and I looked at historically, you know what? Sears was the world's first Amazon. I know you guys are like young and millennials and whatever, but like when I was your age, we used to have a Sears catalog where you could buy anything. And it was really exciting because you get in like September, October, you look through the catalog, get anything you wanted, and it would ship to your house. Took 2 weeks. It's not like Prime for 1 hour. But it was the version of Amazon Prime before Amazon invented Prime, yet Sears is gone. And Amazon is now taking over the world. So what I'm telling you is, I can't guarantee a company, because Sears was the Amazon of their day, is going to stick around. I can't guarantee Amazon or Apple is even going to be around in 20 years. And so that's got to be our perspective, is that the past doesn't guarantee the future. So we're going to understand this uncertain future. That's finance. And then we got to understand what drives value. So when you get the book and you start reading the book, what McKinsey does is they do a good job of organizing what drives value. And what we're summarizing here in this class are what I'm calling the 4 cornerstones of value creation. And these are the things that really matter. Okay. So today we're going to start talking about the first one, which is spread. Okay. So spread is the difference between your ROIC and your cost of capital. So said another way, would you borrow at 8% and invest to make 6? No. Matter of fact, you couldn't be in this room if you thought that that was true. Because every finance class that you've taken so far, NPV is IRR greater than R. To get a positive net present value, your internal rate of return had to be greater than your cost of funds. It just has to. It has to be greater hurdle rate, whatever term you want to use. That's the only way you create value. Plays out in the real world. Okay? So here's the difference. In the project world, we call it the hurdle rate. In the real world, we call it the WACC. Same thing. It's just the cost of capital. That's what you're borrowing at on a risk-adjusted basis. And when you invest in the project, you get an IRR. In the company, you get an ROIC. ROIC, return on invested capital, is the term Wall Street standardized on. It's also called ROCE and RONA and ROI and ROC. The one we're going to use is ROIC, return on invested capital. And over time, you got to have a positive spread. Otherwise, you can't create value. That's where finance begins and ends. So here's the next thing you need to know. Half of that spread, 50%, is the industry. Your industry is actually more important than the company that you were investing in. That's one of the things you're going to learn this semester. Warren Buffett, one of the most successful investors ever, actually says, I don't invest in companies. I invest in industries. Because if you pick, and just think about this, I'm going to show you some data. If you pick a poorly performing company in a great industry, you can still make money, even if they screw it up. But if you pick a great company in a bad industry, there's nothing they can do. So what I'm telling you is that, and there's data to support this, but just conceptually, just think about this. I need to understand, is the market going to be good? Is the market going to be attractive? Because that's going to tell me whether companies are going to be able to win. And there's a lot of academic data, many of it in the book that you're going to read. And I'm just saying, in this class, I'm going to show it to you. I'm going to show it to you in the real world in just a second. But that's the type of stuff we need to understand. And oh, by the way, the markets of today are different than the markets of tomorrow. If the market changes and you don't, you're screwed. General Electric, most valuable company in the world in the year 2000. You know, CEO God Jack Welch, who everybody said was the best CEO ever. But guess what? He was at the time, but the world has changed. And GE today is a shadow of its former self, and they're really struggling because they're all in the industries of yesterday. They're not in the industries of tomorrow, and they're screwed. And I'm saying there's nothing that they could have probably done about this. But the point is, that's what we need to understand as finance professionals. So your industry really does matter. And we're going to start next week by getting into EIC. But here's the point, data. So here's where Bloomberg comes in. So Bloomberg, or the Bloomberg, is basically software. It used to be hardware. Back in the day, in the 80s, when it first started, Michael Bloomberg had a little piece of hardware, looked like a little mini computer, and used to get data out of the terminal. But now they throw out the hardware. It's literally just software. You can download it off the internet. In fact, you can go to Bloomberg.com right now and download the same software that's on your desktop. You can install it. It's Windows only, but you can install it and open it. And when you try and log in, it's going to ask you for a serial number. And you're not going to have one. So when you call them to get the serial number, they're going to ask you for $25,000. So, and a 2-year contract for $25,000 a year. They'll let you pay quarterly, and you can wire it in. They don't take credit cards. But basically, you know, if you're the son or daughter of a billionaire and you got money to burn, sure, buy your own terminals. But for the rest of us, you're going to have to use this lab. But here's the point. Michael Bloomberg started that company, and the idea is it's the pro tool. They got 320,000 users, and basically, if you work on Wall Street, either on the buy side or the sell side, this is the actual software on your desk. There's 900,000 companies of real-time information in Bloomberg. In fact, I'll give you an example. If I go to the top news, there's an acquisition I saw this morning. Who was it? There's a pharma acquisition. Was it Celgene? Somebody bought somebody this morning. Anybody remember who? So I mean, by paying attention to current events. So I'm going to go to today's deals. So M&A is all the M&A deals, and there's 30,364 M&A transactions that are in their database. So you don't need PitchBook. You can use this. And today it was, who was this? Remember who the deal was? So the Wall Street Journal. Amgen? All right, so let's do this. So let me just search for Amgen. There it is. So Amgen today announced a deal to buy Otezla from Celgene from Bristol Myers for $13.4 billion in cash. So on here, if you click through it, these are the deal terms. These will be the parties involved. These will be the advisors that are advising both of the firms. So it looks like the acquirer is using Goldman Sachs, the seller is using Morgan Stanley. That's the law firms that they're using. These are the regulatory approvals that are needed, and then they'll have all the deal data on there. And as the data comes out, they'll have comp data and multiples of previously done peer deals, and they'll value all this stuff. So this is what I mean by, you have access to a pro tool. So these are what the traders are looking at. And by the way, it's also a trading platform. So it's got stocks, bonds, currencies. I mean, you can look up your Bitcoin Ponzi scheme, whatever you guys are doing, it's actually in here. So, but we're going to focus on equities. So here's the first thing. Give me a company. Nike? Okay, so let's start with Nike. So when you start typing, and unfortunately the interface is from the 80s, because Wall Street doesn't like to change. So it's DOS-based, keyboard-based. And that's just, it's not that Bloomberg doesn't want to change it, it's just it's so integrated in Wall Street, it's hard to change their interface. But regardless, you can do kind of a Bloomberg search across the top, Nike, and it'll tell you what securities are available, or their own little Google search. NKE is their ticker symbol. US means it's American stock traded, and equity is the equity. By the way, corp would be the debt. That's fixed income. Okay, so I go to equity, and these are just some of the screens that they have ready to go for Nike. So if I don't know what Nike does, I can go to the description, and it'll tell me more about the company. It'll give me quotes, etc. But again, you're going to get certified. You're going to be using this. So for interest of time, I'm going to go to a section called RV, which stands for relative valuation, so that I can compare Nike against its peers. So they have all these predefined templates, comp sheets, markets, EPS preview, ownership, credit, etc. for Nike's against its peers. And I can change the peer list. This is just their default peer list. But here's the stock price, real time, quotes. But I'm going to come over here to custom, and I can look up any data point that I want for Nike against its peers. Okay, so what we're going to do is I'm going to add a column to this. And oh, by the way, you want to follow along because you want to be able to do this since you got 32 terminals. So let's create logins. All right, so here's your advantage of taking this class. The $25,000 software is free to you while you're a Maryland student, as long as you register in this lab. So if you register for a Maryland Bloomberg terminal, because they know which terminals are on here, through any email address, doesn't matter, it doesn't have to be a Smith one, even if it be a Gmail or a Yahoo, basically they'll give you a free account and free access to the software while you're a student. As long as you keep logging in every 30 days, the account stays active, which you'll definitely be doing this semester. So basically it's just software. On your desktop, there's an icon that looks like this. It's like this green thing. You just click on it and it should open it. All right? Hit enter, or what they call it the go key. Hit the enter key once you load it. Yes?
So my computer is like showing this.
Just let it run the check. These are new computers. I don't know. That might have a problem. You might have to reboot. Yeah. So, like I said, they just put these computers in. I didn't see them until this morning. So you might have to reboot a couple, test them out. If there's problems with the computers, please let me know. I'll let the IT people try and fix these. Or share with a friend. That doesn't sound good. So you might have to share with a friend. But when you launch the software, it has 4 screens. It actually set up, you can have multiple monitors. But basically, hit enter or go, and the second screen will basically be a username and a password, which you don't have yet. So look near the bottom of that screen, and it says create a login. Okay? And it's very simple. You're creating it for myself, not for somebody else. I think it's like a trick question. So you're creating the login for yourself, and then go to the next screen. It's going to ask you for basically your name, and this is very important, a phone number, which is preferably your cell phone, and or your email address, could be any email, and then choose a password. Because what they're going to do is they're going to send you a text message to your phone or to your email with like a 6 or 7 digit code on the next screen, and then you're going to put that code in, and then it's going to give you a username, and then you have an account. Okay, so it takes about 2 minutes, maybe 3, but you're welcome to start creating your accounts here today. But while you're doing that, everyone needs an account very quickly, because in order to do the certification, you're going to have to take the certification through the terminals. Okay, unfortunately, because of the cost of the software, they don't open this up on the web. Okay, so you have to go through the terminal to get Bloomberg certified. Okay, so again, you're going to need the accounts to do this. So once you get the accounts, and text message in, you'll come to the screen. Then, when you get in, yes, sir. Yes, your email. You do the same one. You can have 2 the same one, yeah. They just need a phone number because, like I said, they're going to text you or call you with that activation number. Text is usually the easier way to do it. That sounds scary. Is that the computer? It just started beeping? Okay. We'll just have to let IT know. It may not be working. All right, so once you're into the software, then, and you get your code, and again, you write down your passwords, you don't forget it, and your account, because again, you're going to have a unique account ID. Then when you get to the main screen, as I said, up across the top, you can type in Nike or NKE, click on NKE US Equity. It'll bring you to the screen for equity analysis. Okay, there's 33,000 screens in Bloomberg, so you can easily get lost in the screens. But and at the bottom, RV, relative valuation, which is basically the pure analysis. This is benchmarking. And as I said, they have all these predefined templates, and predefined peer sets, but you can edit and create your own peer sets, which we'll talk about once you get certified. That's why you're going to get certified. Come over here to custom. And if you get to custom, the nice thing about custom is you can look up any data point across these companies. So you can get your own templates. So that's what I'm going to do. I'm going to create a custom template. And down here, where it says add column, the first thing I want to add as a column is ROIC. Return on invested capital. And when I add my ROIC, so Nike US Equity, NKE US Equity, RV, and then custom. Those are the ways you get to the screen across the top. Okay. So then when it says, what do I want to see? I want to get ROIC. It says, which ROIC do you want? Because it's got current, past, 3 years ago, last quarter. Tell me which one you want. The one I'm going to use right now is this is the latest filing, which will be second quarter 2019 for most of these companies. So select it, hit enter, and then boom, there's all the ROICs. Now, the top one says market cap weighted average. The way that you're going to get the market cap weighted average is you're going to go to settings and global settings. And what you're going to do is I find that top section to be just a complete waste of space. So I uncheck the box for show top section because I don't want to lose half my real estate when I look at my company list. But you're welcome to keep it in there if that's the top of the screen. But the most important one is it's got some stats, and I want you to check the box market cap weighted average. Okay? And then you just close, and it would already be saved. So here's the deal. This is the industry average ROIC adjusted by market cap. So some tiny company adjusted for size. Some tiny company doesn't distort the industry average. There is no tool anywhere in the world that does real-time industry averages, except for this, with all financial data. Okay, so you get industry averages real quick. Okay, that's worth $25,000 alone for most people. By the way, you then type in WAC, WACC, weighted average cost of capital, hit enter, and that will give you real-time company and industry WACs. Okay? And if I want to drag the column over, put it in the middle of the screen, I'll drag the columns over, put it in the middle of the screen. So I got my ROIC, I got my WAC. The difference between the two is called spread. ROIC minus WAC equals spread. Positive spread good, negative spread bad. That's about value creation. Okay? So let's talk about industries. What makes an attractive industry from our perspective? Positive spread. All right, an attractive industry is one you can create value. Therefore, the industry's got to have a positive spread. Is this Nike in an attractive industry defined by this peer group? What do you guys do in Tinder? Do you swipe left or swipe right on this one? Your kids, it's allowed to use Tinder. It's people my age that get in trouble. So seriously, is this an attractive industry? Yes or no? Yes.
I'd say
Hold on. Let's try and give it a chance.
yes, because the ROIC minus the cost of capital looks median to be pretty high. But I don't know what it would be compared to.
All right. So
It's
just
definitely positive.
so let's just use the standard. Positive spread is attractive industry. More positive, more attractive. Is this an attractive industry?
That's that yes.
Okay. Did everybody hear what he said? Does everybody agree that he has the right answer? What's really sad is he's going to get a 0 on his assignment. Why is he going to get a 0 on his assignment? What did he not do? So help him. What could he have said so that he has the right answer, but he didn't get a 0 on the assignment? What would you have said instead? Because, how'd you get to 18? Your return on invested capital is, but thank you, and greater than, which is, thank you. And you could have rounded off to 8, and I know what you're talking about, but that's what I mean. And I'm sorry I'm going to be deliberately harsh, because I really want you to do this. Because here's the problem. If he said, and you were right, I know you're right, but if I'm reading a paper, a TA is reading a paper, and he said it's an attractive industry, how do I know that that was actually the numbers he was looking at? He wasn't looking at something else and then mistakenly got the right answer. So that's the problem. Is that, and this isn't even, forget the grading, this is real world. Like there's a lot of bad finance people out there that don't even understand the stuff that they are talking about. And the way you really know is you know your numbers. It's not about boring people with numbers, it's making sure people know what you're actually referring to, because there's a lot of data on the screen. So this is what we're going to practice. Okay, so again, just make sure you do this. This is an attractive industry. Okay, attractive industry has a positive spread. Now here's the second question, competitive advantage. We're going to use a different definition for competitive advantage this semester. We're not going to use the definition where everybody's good. Okay, because there's some companies out there which can't possibly be true. Okay, so in our class, and to some degree in the world, competitive advantage financially is outperformance of your peers. Like if you're in a good business, you're going to make money because you're in a good business. Athleisure is a good business. So if you're really good, you're doing better than the people in that business. So Nike's spread against the industry spread is competitive advantage. Using that logic, does Nike demonstrate competitive advantage? Yes or no with this data? Does Nike demonstrate competitive advantage? Yes or no? Who said yes? Why?
Because their spread of 15.45 is higher than the industry spread of,
Sorry, what 15? I don't know where you get 15 from.
20, their ROIC minus the WACC.
Yeah.
27.55 minus 8.10 is higher than the industry's of 25.43 minus 7.99.
Exactly. And I'm saying you'll get used to this, but you'll be in a couple weeks, you'll be whizzing through all this stuff. But that's exactly right. That's the exact logic I want you to apply. So let's go back to, does Under Armour demonstrate competitive advantage? No. There's a reason why they pulled the plug on all the expansion in Baltimore temporarily. What's the next one? Is it Hermes? Hermes? How do you pronounce that? Is it Hermes? Hermes? whatever that company is. Do they demonstrate competitive advantage? So therefore, more than one company can have competitive advantage following our rules. That's okay. Make sense? So here's the beauty of this. Part of your homework assignment might be submit a screenshot to back up your data. Okay? So how do you submit your screenshot? This little square button up here. Click on this. Take screenshot. Save. Okay? So this is how you get screenshots. Oh, by the way, export Excel. Okay, so you can bring data with you outside the lab. Yes, sir.
So if you wanted to easily calculate, if like it didn't have it in the column, but say you wanted to calculate the spread, can you do it from within the software? And calculate
So two things before we leave. See where it says save over here on the right? Mine doesn't, but yours should. Click on save. Or if you hadn't saved, you can save as new template. But then type in, once you hit save, up to 11 characters. You can name this whatever you want. Your spread template, your ROIC template, just call it ROIC. I called it 443 spread. Once you save it, it's going to show up at this little template bar. So anytime, like I have a template for Nokia, for financial cycle time, for Google, for multiples, etc. Anytime I just go to a screen, click on it, the template gets automatically filled. Okay? So back to his question. Let's say this is going to happen. Sometimes Bloomberg can't calculate this. So there's another section of Bloomberg called FA, which is historical financial statements. This income statement are all of Nike's income statements. And by the way, put into an analyst agreed upon adjusted consistent format. Or if I want, this is the as reported data from the actual Nike 10K filing or 10Q filing. And this is the income statement, this is the balance sheet, this is the cash flow, all the data is there. And here's a nice thing about Bloomberg. If I want to see for the 2019 filing on the balance sheet for accounts and notes receivable, then I click on this and I click on this, and this is the actual section of the 10K document that's going to come up as a PDF. Takes a second to load. Where they got the data point. Because that was the thing. Thomson Reuters data was awful when we used to use that before Bloomberg. And I couldn't figure out how they'd actually calculate data. I swear there was like a random number generator sometimes because you couldn't figure out where their data was. That's bad in the real world if it doesn't reconcile with the 10Ks. And one of the things they didn't do at the time, I don't even know about it anymore, is that when companies restate, Thomson Reuters didn't use the restated numbers, they used the originally filed numbers. Well, that's a problem. So the nice thing about Bloomberg is whatever number you have, they'll show you the source. I'm not saying they're not 100% accurate. Everybody's going to make mistakes. But at least you can check on the data point and calculate yourself. But when they don't do stuff, you're paying $25,000 a year as a trader, they get pissed off. So Bloomberg tends to not have a lot of gaps. All right. So long story short, let's come back. I'm going to go back to RV. Give me another company, by the way. Who? Apple? You said Apple, right? Yeah. Right. So here's Apple. I assume you're talking about the computer company Apple. All right. So here's Apple. If I go back, and I've left the screen, and I go back to RV, then when I come here, I can go back to my custom subtab with Apple's peer group. If I then click on the saved template, kind of cool. All right. If you didn't do that, you could just go right here, replace it with whatever company you want. It'll directly just update the data. So, is Apple an attractive industry? Yes or no? Is this attractive? Well, I think 20.5% ROIC gets whack of 9 is pretty attractive. Does Apple demonstrate competitive advantage? Last quarter they did. 25% against 8.8. Ford. Here's auto. How about the auto industry? Is this a good industry? I don't think so. Negative spread. Borrowing at 6.74 and investing 5.76. That doesn't sound exciting. In fact, Ford is only making 1. They're doing particularly bad in a bad industry. Nobody's doing that well in this industry with the exception of Ferrari. Wonder why. All right. Then, how about Shell? Royal Dutch Shell. We don't have to just go U.S. So this would be big oil and gas. How's the oil and gas industry look right now? So think about this. The Kingdom of Saudi Arabia wants to do an IPO for Saudi Aramco, largest IPO in the history of the world, to raise trillions of dollars. And they're going to the market saying, bet on us. And that's the industry they're saying bet on. You wonder why, and they think people are like, why are you against giving us money? Because your industry is in the tank right now. If oil is $50 a barrel, you're just not making that much money. The returns aren't that great. If oil is $100 a barrel, it'd be a different story. Right now, unless something really changes, oil's not going to 100 anytime soon that anybody's predicting. Obviously, things could happen. But what I'm saying is, this is what we talk about industry. It's a tough industry. All the oils are not doing nearly as well. Okay? Versus, let's take somebody like a Starbucks. You guys need to like your caffeine. Is this attractive? Everybody see Domino's Pizza on this list? 106. Remember that next time you're ordering a Domino's Pizza. Pizza sucks, but they're making money off of you. Versus, here's Macy's. You guys heard about the retail meltdown. Nordstrom's, the family members trying to take themselves private. Trying to retake control of the company because Wall Street's mispricing them. All this data is there. Okay? So, last thing, you're doing Macy's. Well, guess what? Macy's reports. So, I don't know who Macy's is. I read about them. I go to their DES, which is their description, which tells me, for Macy's, what they do. A quick summary. It's like the Cliff Notes for the company. I can also go to ANR, and I can see for Macy's what the analysts are saying about the company. Right now, 2 analysts say buy, 10 hold, 5 sell. Those are the analyst reports and opinions and target stock prices. Okay. Matter of fact, EEO, these are the earnings estimates for Macy's for the next 3 years. These are the quarterly estimates for Macy's for the quarter, just October 31st. That's what Wall Street's expecting them next quarter when you read whether they missed or met estimates. You get real-time views into this. Also, I was looking this summer, somebody asked me a question about this, about a company called Whirlpool. And they were asking whether I thought that the Trump tariffs would affect a company like Whirlpool. So one of the things I did is if you go to SPLC, that supply chain, on the left will be every supplier of Whirlpool. On the right will be every customer of Whirlpool. And so Whirlpool's biggest customer is Lowe's. They represent 12% of Whirlpool sales. And 5% of Lowe's sales are Whirlpool's products. Home Depot is 10%, 9.35% of Whirlpool's business. So Lowe's and Home Depot are 21% of Whirlpool. So how Lowe's and Home Depot do affect Whirlpool in addition to the tariffs. By the way, this red and green means in the last quarter, did the company meet or miss their earnings targets? So Home Depot last quarter missed its earnings targets. Well, guess what? If Home Depot, which is 10% of your sales, is missing its earnings target, that could affect Lowe's. And oh, by the way, their 2 biggest suppliers, Nidec and Flex, non-US companies, probably impacted by this are also missing their earnings estimates. So I can start working my way very quickly through the supply chain, doing data. I've shown you 5 screen, there's 33,000 more to go. We're not going to know that. But this is why you need to get Bloomberg certified. You got a Ferrari of a tool here, and we need to use it to help us do this class. But here's where you got to help me help you. So how do you get certified? In the terminal, which you can only, unless you spend all the money, do either in this lab, which unfortunately used to be an open secret that nobody knew about, but unfortunately people now know about this lab. All right, so there's this lab, and there's the first floor lab, which is always packed. This is your primary choices. Go to BMC, Bloomberg Market Concepts. That is the Bloomberg certification. Basically, you take it, and then they give you this nice fancy certificate of completion, which you can put on your resume, LinkedIn profile, and it'll actually impress people in job interviews. But don't put it on there if you're not certified. Because first thing I'm going to ask you, if you're Bloomberg certified, what's EEO again? What's SPLC? And if you're like, what? Then the job interview's ended. So I'm just saying, be careful about when you say you're certified, because you got to know the terminal when you actually go do interviews. But if you do, you're going to distinguish yourselves from a lot of candidates at other schools that have no idea what gibberish you're talking about. Because one of the first things you do if you get hired by a Wall Street firm is they send you through Bloomberg training. So you guys are going to have a big leg up. But here's the point. So how do you get certified? Unfortunately, it's weird, but they have a second sign up and a second login for the certification. So you have a login to get in the terminal and a separate account to get to the certification. Just the way they do it. And you got to do it through the terminal. Otherwise, you have to pay $149. Okay? You can do it on the web for $149, terminal free. I'm not going to ask anybody to do this on the web and waste $150 that you can do for free. How do you get certified? You click on the course modules. Once you sign up, there's 4 modules. Economic indicators, currencies, fixed income, equities. Right? Now, change. Very important as we wrap up. In previous semesters, I only required the first 2 to be certified for this class. Economic and currencies. This semester, new, I'm actually requiring all 4. Because you can't get the certificate unless you do all 4. So if you're doing 2 of them, you might as well do the other 2. Even though fixed income and currencies don't directly apply to us, I still want you to do them just for the certification. This is 5% of your semester grade, and you got to do it 2 weeks from Friday. Okay? Now, here's the deal. It says 8 hours. It'll probably take you 4. All right? But it's going to be real work to do these. You can stop and start and come through. And the certification, because I got blamed for this, it's kind of silly. Okay? It's a stupid multiple choice. Okay? I don't agree with the way they do it. Sorry, Bloomberg, I know you're probably listening to this, but like it's not what I would call the academic side. The questions for multiple choice are, on the previous screen, what was the 3rd word of the 4th paragraph that represented the graphic? Like, those are the types of questions you're going to get. So if you don't pay attention, you're going to fail. All right, because they're actually testing you on what you just read. And they're being very specific about what was on screens and what was in the words and asking you those questions. That's not my test. That's the real world test. I'm making you take it. So here's the thing. I'm adding a standard, though, that's higher than the real world. Okay? When you click through, you have to get 70% correct or higher in every one of those 4 sections. So Bloomberg will give you a certificate with less than 70% correct. This class, I'm going to give you a 0 on your grade unless you show me 70% correct. Okay? So in addition to the certificate, you have to print out a screenshot of the 4 screens once you take them with this percentage score greater than 70 for all 4. Now, I'll talk about this more on Wednesday, but you can only take the test 1 time. If you take the test 1 time, it won't let you take it again. If you are in that situation, you don't score 70, you can't take it again, you have to create another account. You can keep taking accounts to get 70%, but you got to get the 70%. Okay? So your assignment between now and Wednesday, number 1, start signing up for teams. If you don't get to a team by Wednesday, I'll put you in a team at the end of the week, put you a chance to find some people to work with. Number 2, get the book. Okay? Number 3, get your Bloomberg account. Feel free to start the certification. And number 4, next Wednesday, there will be no lecture, just to be really clear. So Monday is an official university holiday, Labor Day, and next Wednesday, there is no lecture because I'm giving you class time to get certified. Okay. Now, obviously, it's 8 hours. It'll be more than next Wednesday, but at least the lab will be open next Wednesday and shouldn't be available to anybody that's not a student here. But take advantage of that next week. So most of next week is getting certified. We'll pick up here on Wednesday's class. Okay. Thanks, everybody. Have a good day. One second. Sorry, I just wanted to stop the recording. Go ahead.
I'm seeing 5 daily.
Which one? Oh, the getting started? Yeah. Yeah, I'm sorry, it's all fine. It's all fine. But I don't know if there's a test in the getting started or not. I think there's only 4 for tests. But whatever it is, yeah, do the certification. Because it'll be good just for your resume.
Yeah, I got a couple other questions.
Yeah, I gotta go.
So I have a question. You said certification.
Well, you have to complete the certification by 2 weeks from Friday.
No, so you mean like in this room, you could do it like
Oh, yeah,
anytime, like
anytime.
outside of the class, it's fine.
Yeah, you'll have to.
So is this like dual almost open?
So there should be, on one of the outside doors, there's a waiting room. It should be open between 85 and
Okay, so if there's no class, we can just go.
yeah. But here's the thing, if you're in it, you can still be in the room, it's just the dark doors are locked. So as long as there's somebody in here after 5 o'clock, they can let you in. But there's nobody here to let you in, then you can't see it.
Okay.
Yeah, so there's nobody here that's you come.
Okay.
Hey, welcome back.
Right, so,
Good.
We can start right now the certification or
About the what?
the certification can we start right now? Or?
Well, I'm saying you already have your account. I hope you should sign up for it, right?
No, yeah.
Yeah, the Bloomberg account.
Yeah.
And then go to BMC,
Yeah,
create a second account.
But can we start right now?
Oh, and
Or
then once you have the second account, you can start.
it have to be here?
Well, I'm just saying you have to take it through a terminal.
Yeah.
So either this lab or the one downstairs, practically the one you have to take. And then we're about to have another 45 people come in. So
Okay, then.
you'll have to give up your terminal right now.
What are you doing with our certification? Can we just like stop?
You can stop and start as much as you need to. Just finish by the deadline.
Oh, okay. Thank you.
Yes.
What's going on? How you?
Good.
Hey,
Go ahead.
That's good.
so I'm in the section activities. I was the only one available, but so I have to like pay for my school and like I'm trying to get the afternoon shift. So this class ends at 3:30. So if I could get the 4 o'clock shift, that'd be awesome. But that's impossible.
Well, 2 things. I'm trying to scare a few people away.
Okay, yeah, do that.
So hopefully some people will drop by the time the drop out period. Because they'll look at this like, wow, this is a lot of work. I want out of here. That's okay. And so that should free up some slots. But if worst case scenario it can't,
Yeah.
what I've allowed
even
people
like
to do-
exam days all coming in different
I was going to say, you have to be on a team in the section you registered for. You have to take an exam during the period that you're registered for.
Yeah.
But when we're doing days like today,
Yeah.
you could technically, I mean, you'll notice it's kind of crowded, but you could technically go to another section as long as there's not something due that day.
Okay, so for today, is it cool if I do this section?
Yeah. But I'm just saying that I can't move you.
No, yeah.
But if
I'll
you end
keep-
up registered-
I'll look on schedule.
But hopefully, like I said, I usually get at least 5 or 10 people that drop the class after the first week. So it'll probably work out that you get the time to work. Probably. Yes. So for you, welcome back.
Thank you very much.
So, like I said, you're just, as far as you're concerned, you're just a student taking the class. You're starting from scratch. I've changed some things this semester, so make sure you do it as it's this semester. Okay. So the only tricky part, like I told the TAs, is that you're not in Allen's today. And we have to find a way, because unfortunately, if you're not registered through the registrar, you can't easily be put, somebody's to manually put you in. So I'm going to try and get somebody from IT to manually add you to this class. I don't know how long that will take, but what I just want to be okay to do is we're starting teams this week. By Wednesday, the teams will be formed.
Great.
You probably won't be announced to be officially on a team, but you'll need to be in a team. Because the first team assignment is next week.
Are you assigning us your group, or are we?
What's going to happen is I'm going to tell them today that you can pick your own team. Like you can drag, have 7 teams set up, you can pick teams, and whoever is not in a team, I'm just going to move it. So if you want, before you leave today, I could ask, hey, anybody in team, I don't know, 17 or something like that.
Yeah, that would be
And then they'll just say, look, he's not in, for technical reasons, he's not in there yet, but he's going to be in your team or something like that.
That would be
And
perfect.
because what I don't want you to do is I don't want you to fall behind
Not
with
being-
teams, given that you're not in there.
Right.
And same thing with grades. If you're not in by next month, whatever the first quarter is, you're going to have to email to your team if you can't submit it to them. Because you'll have a TA for this section.
Right.
And or any TA for that matter. But you'll need to be able to email in the assignments. And hopefully by then you'll be in there, but if not, you'll still have to keep up with what you have semester.
Sounds good.
Like I said, you're just taking it.
Yeah, if you don't mind, just like putting me in your group today, seeing if someone.
I'll be trying to do that before we leave. So yeah, before I leave, stick around and I'll see what I can do.
Sounds good. Thanks.
All right, welcome back.
It's a quick question with the competition. So, I've done like 3 different simulations before, and I know you're restricted by weeks, but are we?
By weeks?
Yeah, because like it's only gonna last for like this semester.
Well, it's it's
our approach
12
to it-
total weeks.
Yeah. So our approach, like, are we gonna have a set rules, or we
There are
can
some
use
rules.
options, or
No
we
options.
Can, no options.
Only equity.
Okay.
You can only go long.
And it doesn't matter
Long or
which-
short, but no
Long
options.
term. Okay. And it doesn't matter whether it's we use one strategy or another, as long that we make the highest return.
Yeah.
I see.
Well, within limits. Like there's a minimum. Like you're not going to be able to trade a stock for less than $3. There's
Okay, so
certain
penny
exchanges.
stock.
No penny stocks.
No penny stock.
No micro caps. Like there's going to be some restrictions. Like I don't want you finding the next biotech IPO. Like that's not what this class is about.
Okay. But
but there are some restrictions.
but it doesn't.
But
make
generally,
sense, yeah.
there's a lot of clues to choose from.
Okay. Okay.
Yeah.
Yeah, I'll just wanted that. So
But that's what you'll do is again, it'll be up to your team to decide how you want to trade.
Okay.
So for example, you could trade exclusively on high beta stocks as an example. So let's just go find the stocks with the highest beta and just buy them.
Exactly. Or
So-
the highest rating.
or
from
highest
like
rating or
analysts
whatever like that.
Something like that.
That's up to you because that's the point. I want you to actually try things out. And
But
think
is it
about
like 12 weeks, like really sure? Because like in terms of the strategies, even the one you mentioned within Warren Buffett, it's always on the long term. It's not really-
Absolutely.
which is making this like way harder.
That's the point of the class.
I see.
But here's the point. What it's really about, and you'll learn this in about another week or so,
Mhm.
is you're going to realize in the short term, it's all an expectation. Actual performance is irrelevant to a stock price in the short term. What matters is performance against expectation.
I see.
So if you can find companies that do better than expectation, you're going to win the game.
Got it.
So that's what I'm really pushing you to do, is realize that you can't just look at the fundamentals. Because you got to understand that if everybody else is looking at the same fundamentals and figured out they're going to do well, they're going to win. It has nothing to do with the company. It's just people have already bid the price up, assuming they get performance.
That's why you said you had to keep up with what's going on, because every tweet nowadays is like affecting the entire.
Well, just a good example.
industry.
So I don't even know what was said this morning about the trade war, but if something's said about the trade war,
Yeah.
then there's going to be companies that are going to go up
Yeah,
and down based on which way you think it's done. That's your chance to make money.
Okay.
Because it's going to be, yes, the algorithms are getting faster, but even the data says it plays out over a couple of days. It doesn't play out over a couple of minutes. So you have some opportunity if you pay attention to make some money, but you got to pay attention.
Got it. Thank you.
But unfortunately, some people last semester bought Boeing and they were completely screwed.
Oh shoot.
There's nothing you can do.
Oh, my God.
That's real world too, unfortunately. Yes, thank you. 26th.